Cold open. Nvidia sits at $214.72 with nearly 100 million shares in its name. Artificial intelligence infrastructure spending is approaching $500 billion. The technical scan across more than 10,000 symbols is screaming caution, 35 bearish versus just 15 bullish. And somewhere between the AI mania, tariff headlines, and a $912 million SpaceX position, you have a market that is trying to figure out where the smart money is going on this Friday, August 22, 2026. Good afternoon. Transition the AI infrastructure spend, $420 billion and counting. Let's lead with the story defining the market right now, the AI infrastructure build-out and the sheer scale of capital being deployed. The headline from 24/7 Wall Street was provocative. Alphabet, Meta, and Microsoft are being flagged for around $3 trillion in hidden debt tied to the AI boom. That number alone is staggering, and it frames the most important macro debate of this cycle. Are these companies building genuinely productive infrastructure or carrying a debt burden the market hasn't fully priced in? The other side is a $420 billion combined push from Alphabet and Amazon into AI infrastructure. Motley Fool noted 4 hardware stocks set to profit, Nvidia, SNDK, Avgo, and Micron's MU, as the primary beneficiaries. A prediction says CoreWeave stock, CRWV, could double on a specific date, connecting to broader Nvidia and Oracle plays. Nvidia itself appeared in a valuation piece arguing that Nvidia doesn't look as expensive as you think, flagged alongside AMD, and Avgo. Perhaps the most fascinating development, Anthropic's market debut could break the SpaceX IPO record, per AFP. Apple, SpaceX, and MSFT were listed as related tickers. Meanwhile, Alphabet may stake a 7% position in Marvell Technology, MRVL, in what 24/7 Wall Street called a strategically significant move for Google's AI plans. So the AI narrative is layered on itself, the trillion-dollar hidden debt question, the $420 billion build-out, CoreWeave's Dublin prediction, Anthropic's potential debut, and Nvidia anchoring everything at above $214. Transition macro, tariffs, companions, and the retail shift. Now to the broader macro picture, where trade policy and consumer spending are taking center stage. Investors Business Daily led with a story that captured the dual forces at play. Dow Jones futures were higher as the market attempted to repair some damage ahead of Nvidia, while at the same time, former President Trump announced new tariffs on Canada. The headline linked this to a broad basket of names: NVDA, DI, HG equals F, FCX, Hood, CRM, GSBC, IXIC, MRVL, and cryptocurrency-linked BTC/USD, underscoring how trade policy touches literally everything from semiconductors to industrial metals to the crypto market. Separately, Yahoo Finance reported that tariff refunds are hitting retailers' wallets and asked what those retailers are doing with the money. The article named Amazon, TGT, and WMT, the 3 dominant American retailers, as the primary recipients. This ties directly into the Walmart story from the street, which said that Walmart shoppers must consider a major shift coming to prices. When a retailer as large as Walmart starts flagging pricing shifts, it is a signal that the broader consumer environment is changing. In commodities, gold, silver, and copper are all rebounding in August. Motley Fool pointed out that one stock could give investors exposure to all 3, listing GC equals F, C equals F, HG equals F, and notably NVDA again, as copper often plays into the semiconductor equipment side of the story. This commodity rebound, combined with the tariff environment, suggests investors are positioning for a mix of inflation hedge and industrial recovery. Transition individual stock stories, space, biotech, and retail. Let's move through some of the most notable individual stock stories from today. DE. Shaw just disclosed a $912 million SpaceX stake, SpaceX, and a 58% reduction in its Broadcom position, Avgo, in the same quarter. That is a consequential trade. cutting Broadcom by more than half while simultaneously building a massive SpaceX position tells you something about where one of the most respected quant funds is positioning for the future. The article also flagged MSFT and Nvidia as part of the broader ecosystem they are tracking. In biotech, Thermo Fisher Scientific, TMO, appeared in 3 separate article clusters today. Simply Wall Street noted that TMO could be fully valued on Parkinson's proteomics progress, that its stock fair value rose after Q2 strength and positive analyst revisions, and that the stock looks fully valued following its microbiology sale. The consistent analytical message is that TMO is fairly valued at current levels, not cheap, not rich, but fair, which means the next catalyst will be what drives the stock either way. Pfizer, FI, got its own prediction piece from Motley Fool asking where the stock will be in 2030, with references to Nvidia and the S&P 500. The implication is clear. Analysts are actively modeling a long-term case for PFE that connects it to the AI-driven drug discovery narrative. In retail, Target stock has been crushed, but a 24/7 Wall Street piece made the case for not giving up on it, listing cost, TGT, and WMT as the competitive set. Pinterest's ticker, PINS, was in the spotlight because an insider dumped nearly 94,000 shares after the stock dropped 33% over the past year. That is a large insider sell, and it sends a message when combined with a year-long decline. On the financials side, Bank of America, BAC, faces SEC insider trading charges, and Simply Wall Street asked what those charges mean for the stock. JP Morgan, JPM, made its first office real estate acquisition, which still lags its industrial portfolio, raising questions about how asset managers are positioning in physical commercial real estate. Energy names got their share of attention too. Shell, and other oil majors are not price gouging, according to Motley Fool, with XOM, T, CL equals F, CVX, and Nvidia all flagged in the broader energy conversation. Meanwhile, ExxonMobil is shifting its focus from the Tengiz field to Kashagan, a move that Simply Wall Street says tells us something meaningful about XOM's strategic priorities. The tickers CL equals F and NG equals F were highlighted alongside this story. Philip Morris International, PM, got 2 Simply Wall Street pieces today, one noting new ZYN clearance and an 8% discount, and another saying the stock's fair value edges higher on ICOs and ZYN optimism. Transition market movers and technical signals. Now let's check the tape for your quick mover rundown and the technical picture. On the gainers side, Ardaku led with a 53% move to $9.95. UXIP rose 32% to $13.09. XRPT jumped 31% to $28.75. MRAL surged 31% to $38.40, and XXRP climbed 30% to $27.02. ETH gained 21% to $15.20, with TXXT, SIFC, REOX, and HUTC all up 16 to 18%. On the losers, MRNX crashed 48% to $74.31 on 2 million shares. MRNY fell 24% to $32. ETH dropped 22% to $35.50. AFS shed 15% to $5.63, and SMSD fell 15% to $36.86. Volume told a different story. HAL had nearly 300 million shares under $1. KNRX had over 140 million at 52 cents, and GOS had over 130 million at 15 cents. BITO, the Bitcoin ETF, traded over 134 million shares, up 6%. IBIT had over 108 million at $41.20, up 6.2%. NVDA had 99 million shares at $214.72. The technical signals were deeply uneven. A scan across 10,791 symbols produced nearly 10,000 signals, 15 bullish versus 35 bearish. That is a more than 2-to-1 ratio in favor of caution. The top bullish reads showed strong momentum on PFSA, TPC, RFI, RFAU, and IPST. But on the bearish side, NWOW and RFA were flagged for potential overextension. BTOG was also flagged for potential overextension, and XCH and Nexer were in overbought territory. Once again, the names with the strongest momentum are also the names most at risk for a pullback. Transition dividend play and closing thoughts. If you prefer something more stable, today offered multiple dividend stories. Motley Fool made its case that Coca-Cola Co. is the best dividend stock. 24/7 Wall Street profiled a 77-year-old collecting $9,700 a month without selling shares, referencing a portfolio around PEP, NTRS, LIN, EXC, PFG, and KMB. Realty Income, was highlighted as the best non-tech dividend play. 3 Vanguard ETFs were flagged as better positioned for what comes next with Nvidia as a central holding. So here is the takeaway for this Friday, August 22nd, 2026. The AI infrastructure narrative is the overarching theme. $3 trillion in reported hidden debt on one hand, $420 billion in announced build-out on the other. Nvidia at $214, anchoring the conversation across nearly every AI headline. Technically, the market is flashing caution, 35 bearish versus 15 bullish, and the biggest gainers are the same ones flagged for overextension. Momentum traders face real risk. Dividend investors have surprisingly rich options, OPEP, LIN, VGT. It is a Friday filled with crosscurrents. The biggest companies in the world are spending record amounts on AI. Bitcoin is near $77,000. Shaw is building the SpaceX position while trimming Broadcom. The AI ecosystem is layering on itself so fast it is hard to keep track. It is a market that remains deeply uncertain about where it all ends. Thanks for listening. I will see you tomorrow. Until then, stay informed. Sign off. This has been your market news briefing for Friday, August 22nd, 2026.